So, good morning, students. Today we are here with the new experiment of teaching. Due to the COVID 19, we are starting with the online teaching method through the video. Yes, students, you heard it right. It's an online teaching video. So, I hope you all are fine. We are going to start with the one of the most important chapter of your accountancy, that is the goodwill, its nature and its valuation. Students, this chapter counts for around at least 4 marks in your exam, the maximum 4 marks actually. It can come for 3 marks also, and also it can come for the 4 marks also, but most probably it will come for the 4 marks. Okay, now students, first of all I would like to make you known what do you mean by goodwill. As you all know, if a simple layman person will say the goodwill means, sir, it's a reputation, it's a status of the business, or it's a well-known being of the business. Yes, students, yes, this goodwill term is right. The goodwill stands for that only. So our next slide is now, goodwill is an intangible asset that is associated with the purchase of one company by another. The value of the company's brand name, solid customer base, good customer relation, good employees relation, and the proprietary technology represent some examples of the goodwill. In simple sense, if I break this term goodwill, it means good name of the business which is due to its reputation and due to the well satisfaction of the customer base. As you know that the customer first purchase from your business, they will comes to know or they will satisfy from your business product, they will again buy and buy, they will make more of the customers to be involved in your business. It means there will be more customer base, and by this your business reputation will going to increase in the near future. So goodwill is the well known or the good name of the business, which is because of the customer relation, good employees relation, and of various things. Yes, students, goodwill is valued under an accounting standard 26, which is an intangible asset. You are required to learn this accounting standard name only because it may come in your 1 mark question. Okay, so we are going to go with the new slide. What are the characteristics of the goodwill? As students, it is there on your screen. It is going to be understood in just a simple terms. Okay, now what do you mean by goodwill? As a students, goodwill which we cannot see, we cannot touch, only we can feel, so it is not a tangible. As a student in your class 11th you have studied tangible means anything which can be seen or touched, but intangible means which cannot be seen or touched, which can only be felt. So goodwill, we cannot say this person is having 2 lakh of goodwill, we can only say this person is having a good goodwill. So goodwill stands as an intangible asset. Yes, it is a valuable asset of the business. Because of the goodwill only, business is going to continue its business for a long foreseeable future period time. Yeah, it shows the excess earnings profit of the business. Let's say, students, there are the two business, Big Bazaar and the DMart. Big Bazaar is carrying on its business for the since last 10 years, and the DMart is carrying on its business for the just 5 years. So now if we comes to know, the people will be knowing more to the Big Bazaar and less to the DMart. So the excess earning profit of the Big Bazaar is more than the DMart, and because of that the goodwill of the Big Bazaar is more. Yes, the next characteristic, it is a value is liable to the constant fluctuation. Yes, student, this one is the main thing. Suppose one of the customer is not satisfied with your product. Okay, one of the business, next he will go to the other customer and he will say this business is not providing the good product. So other customer will also left your business, they will not be satisfied, and some of the customer will come, some of the customer will go. Because of this your reputation may fluctuate. It is not like that your company's reputation is going to increase day by day. It may be sometime if you are not providing the good product to the customers, your business goodwill is going to fluctuate. Okay, the next, business is goodwill is calculated only when the entire business is sold. We cannot calculate the goodwill in a part. If we, let's say, suppose business is going to know what is its goodwill, but he is not selling its business, so students, at that time the goodwill is not can be calculated, but only in the two circumstances where the business is admitting any partner or any partner is retiring from the business, at that time we can calculate the goodwill as like we are converting this business into the new partnership firm. Okay, as the exact difficult to value the exact value of the goodwill, because goodwill depends on the customer satisfaction, your brand reputation, the product which you are providing, or etc. Because of that your goodwill may fluctuate. Okay, so students, we are going with the nuance for valuing the goodwill. Now students, in our this chapter we are going to go through with the partnership form only, but I have given you the examples related to the sole proprietorship, partnership and the company, but you are only required to learn the reasons for valuing goodwill in terms of the partnership. Student, this question is generally, most probably, may be asked in the 1 mark. What are the various reasons for valuing the goodwill? State. So you are required to state. But I have given here the sole proprietorship firm, partnership firm, and the company. But we are going to understand related to the partnership firm. Now, if I said I am required to value the goodwill can be valued because of the reason. When a new partner admits into the firm, we are required to value the goodwill. When one of the partner has achieved that much age and he wants to retire from the business, then also we are required to value the goodwill. When partners are required to change their profit sharing ratio, earlier they were sharing the ratio 1:1:1, that is equal ratio. Now they want to share the ratio 3:2:1. So in this change of ratio also, they also want to adjust their goodwill, so they have to value the goodwill. Now also, if one of the partner die, then also we are required to value the goodwill. If a partnership business is going to amalgamate with the another partnership business, amalgamation means one partnership business is going to um, joined with the other partnership business, that is known as amalgamation. That is, one business is combined with the other business, at that time also we are required to value the goodwill. If one of the business, if the partnership firm is going to be sold, then also we are going to value the goodwill. And if the partnership business is converted into company, this company may be private company, public company, or limited liability partnership, in any form the goodwill is to be calculated. And the sole proprietorship and company, it's for your reference, you have to study or read from here. Okay, now we are going to go through the next slide. Classification of the goodwill. First of all, I would like to make you know what are the classification of the goodwill. Goodwill are classified in a two types, that is the purchased goodwill and the self-generated goodwill. First of all, I would like to know as a purchased goodwill. As a word suggests, purchase means we have paid something for carrying or for purchasing that goodwill. Let's suppose big bazaar. Big bazaar is having a value of 10 lakh at the time of his purchase. Now, after carrying on this big bazaar business for so much period of time, now he wants to sell that big bazaar. At that time, there are people who are ready to purchase the big bazaar for rupees 15 lakh. So, for 10 lakh big bazaar business, person are going to purchase it for the 15 lakh. So this 5 lakh which the people are paying extra, it is known as the goodwill. So I, as an, in this question, in this slide, I have given already, purchase goodwill is the goodwill which is acquired by making a payment. For example, when a business is purchased, the excess of purchase consideration over the net asset, that is asset minus liability, is referred to as the purchased goodwill. Now important feature is it is always arise at the time of purchase. It is to be recorded in the books of accounts, because students, when we are paying something, when we are paying something for any type of purchase, it is to be recorded in the books. Hence this goodwill is supposed to be recorded in the books. Goodwill is an intangible asset. Assets comes under the balance sheet, so it is to be shown in the balance sheet as an asset, and it is to be amortized. Students, as you know, the fixed asset are to be depreciated, and this goodwill is also an fixed asset, but it is a form of intangible asset. In your class 11, you have known that intangible assets are always amortized. So this intangible asset, that is the goodwill, is amortized over useful life. And second basis is the self-generated goodwill. Student, this goodwill is generated by ourselves. As we want to know what is the value of our business, we are not required to sell our business, just we want to know what is the value. It is internally generated goodwill. So this type of goodwill is known as self-generated goodwill. Okay, and student, as in self-generated goodwill, there is no value, it is already existing, so we are not required to record it in the books of accounts. So we are going with the next slide. So from this, the chapter main calculation form is going to start. Goodwill valuation methods. How many methods we are having? This is a form of a pyramid in which the downward pyramid is suggesting about the purchase of average profit method. The middle one is relating to the super profit goodwill valuation method. Next one is the purchase of weighted average profit method. And the last one is the capitalization method. Now we are going to study this all methods in a very simple way and with an example which you like, which you are going to like in a better way. And also if there is any doubt relating to any of the methods, any of the question and which I am going to say you are required to make me known. Okay. First, the purchase average profit method. As a students in your class 11, in your economics, in your statistics subject, you have known the mean, how to find out the mean. At the time of finding out the mean, as a simple method, you were doing like sum total of all the amount divided by the number of years. Yes, students, that mean is nothing. It's your average profit. Now, in this question, suppose we are given a 4 years profit. Okay, we are given with the 4 years profit. We are required to find out the average of that profit. So for finding out that average, we are required to add all that 4 profits and divide by the n number of years, that is the 4 years. Let's say the total of the 4 years comes about 4 lakh, and total 4 years we have taken, so 4 lakh divided by 4, so average comes to 1 lakh. Now the goodwill is to be calculated as average profit is to be multiplied by the number of years purchased. Now students, in your question only it is already given the goodwill is to be calculated for 3 years average purchase method, 4 years average purchase method. So that amount is to be multiplied with that average. Now student, this average profit is measuring the performance of the business for the past many years. Now business wants to know what the profit they are going to earn in near future. So on this average only they will come to know what is their performance which is going to be there in the future. So they are taking this average profit as a measure for valuing the goodwill. This one is the very simple method for calculating the goodwill. Now this profit, the actual profit which you have got, in that there are something abnormal losses which you have deducted. There may be abnormal income which you have added. This abnormal income or abnormal losses means which are not going to continue in a near future also. They comes instantly. They are not of a recurring nature. So this type of abnormal profits we have to reduce from that profit of any of that year, and the abnormal losses we have to add it back. In our this slide also I have given there, profit are to be calculated after adjusting abnormal profit and abnormal losses. That is, the normal profit is equals to net profit minus abnormal gain plus abnormal losses. The average profit is to be multiplied by the number of years, which I have already said. So by this, we are going to get the goodwill. Now I have given the formula. Average profit is the total profit of all years divided by the number of years. And the value of goodwill is equals to average profit multiplied by the years purchase. We are going with the one example after this slide. The total capital of, this one is the question which I have taken from one of the book, and you are going to understand what the topic which I have understood or cleared through in the theory terms and now in the practical terms. The total capital of the firm of Saurabh, Mohit and Nikhil was 1 lakh. Okay, total capital. The net profit of the last 3 years were also given. 2013-14 profit 40,000, 2014-15 profit 46,000, and 2015-16 profit 52,000. There was an abnormal loss of 3,000 in year 2014 and 15. Student, this abnormal loss is in the year 2014-15. So we have to, what we have to do? I have said abnormal losses is to be added and abnormal gain is to be deducted. So this abnormal loss is to be added in the year 2014-15. The goodwill of the firm was valued at 2 years purchase. Student, I have already said in the question, number of years purchase is always mentioned. So here it is written, it is to be valued at 2 years purchase of average profit of last 3 years. So calculate the value of the goodwill. In our solution, the total profit of the last 3 years, 2013-14, we have taken 40,000 in the outer column. 2014-15, student, the profit was of 46,000 and there was an abnormal loss of 3,000 that year. I have said abnormal losses is to be added in that year. So 46,000 plus 3,000, we got 49,000. 2015-16, we have got the profit of 52,000. The sum total of this that comes to 1,41,000. It is the total profit of n number of years, that is of the 3 years. Now what will be the average profit? Average profit is the sum total of all the 3 years divided by the 3 years. So 1,41,000 divided by 3, we got the 47,000. It's our average profit. Now how to calculate the goodwill? Goodwill is average profit multiplied by the number of years purchase. In this question, we are given with the 2 years purchase. So average profit, that is 47,000, and the 2 years purchase, that is multiplied by 2. We have got the answer, that is the 94,000. Okay, student, this one is the very simple and very logical question and very easy to understand how to calculate the average profit. I have given one question to you with this video. Through this video, you are going to get this question also, and also you are going to get the answer also. Student, please don't see the answer first. First calculate by yourself. Again, I am repeating, average profit method is the sum total of n number of years divided by the number of years. And this, for calculating the normal profit, we are required to add back the abnormal losses, and we are required to deduct the abnormal gains of the respective year. From this basis, you are going to solve this extra question after this video get over. Now student, the second method that is there is the years purchase of weighted average method. Now students, first of all, I would like to make you very much clear that this method is generally less asked in your exams. But for your reference, if something is going to be asked in your CBSE, because CBSE is not that much fixed in what they are going to ask, they may ask related to any type of topic. That's why I am covering this topic also here. Years purchase of weighted average method. Now what do you mean by weighted average method? Suppose student, any business which is earning a profit in the first year of 10,000, in the second year of rupees 12,000, in the third year it is 15,000, in the fourth year it is 20,000. Now student, from my way of speaking, it is like the profit is going in an increasing form. They year by year they are earning an increased profit. So in that form, the average profit is not that much suitable. So we are going to calculate this by the weighted average method. Now student, in this weighted average method, it is just like your average method only, but in the weighted average method, we are required to give weights to the any type of profit which is there. So we are going to give lower weight to the lower profit and higher weight to the higher profit. In this slide also I have written this. This method is modified version of years purchase of average profit method, which I have already said it is just like your average profit method. Under this method, each and every year's profit should be multiplied by the respective number of weights, example 1, 2, 3, etc., in order to find out the value of the product, which is again to be divided by the number of weights. In your average profit method, we have divided by the n number of years, but in this weighted average profit, you are required to divide by the total weights which you have taken. This can be known by this example which is there in the next slide. Okay, sorry. Weighted average profit is to be calculated as a total profit of all the years divided by the number of years. This number of years stands as a total weighted years. Okay, and the value of goodwill with the weighted average profit into the years purchase. This year's purchase will be given in your question. So we are going with this question. This question is also taken from one of the book. The profit of the firm for the past 5 years are as follows. The year ended 31st March and the profits are given 2011 43, 2012 50,000, 2013 52,000, 2014 65,000, and 2015 85,000. You are required to calculate the value of the goodwill on the basis of 2 years purchase, 2 years purchase of weighted average profit. The weights are used to be given as 2011 as a 1, 12 as a 2, 13 as a 3, 14 as a 4, and 15 as a 5. Now in this solution, I have given year ended 31st March 2011, 12, 13, 14, 15. All the 5 years have been written. Next to that, profits 43, 50,000, 62,000, 65,000, 85,000 also given. and beside that weights are also allotted. 2011 weight L is allotted, that is 1, and next 2, 3, 4, and 2015, that is the last year profit, we have allotted the weight as a 5. Now what we are required to do, as in your statistics, while calculating the continuous mean, in that you are required to find out x into f, then we are required to do a sigma xf divided by the sigma f. It is just like, let take this profit as an x, this weights as a frequency. So profit into weights, we will get the product. So 43,000 into 1, 43,000, 50,000 into 2, we get 1 lakh. 52,000 into 3, we will get 1 lakh 56,000. 65,000 into 4, we will get 2 lakh 60, and 85,000 into 5, we will get 4 lakh 25. So sum of all these products, we will get 9 lakh 84,000. This one is the total weighted profit. And the total weight is denoted over here, weights 1 plus 2 plus 3 plus 4 plus 5, total comes to 15,000. Now weighted average profit, which is equals to total weighted profit divided by total weights. The total